Alright, this is going to be video 2 of the series of videos that I told you about. On the first video I did the indices. Now I'm doing the ETFs, which is the exchange traded funds that follow the indices, and this is the SPY. And I'm skipping the Dow Jones and the Dow and the DIA because 30 stocks compared to, even though they're the largest caps, um, which means that the biggest companies, 30 biggest companies in the United States, uh, it they don't really tell too much of the story. And I like to use the S&P, the Nasdaq, the Russell 2000, which they have a lot more stocks, which tell you. Give you a little better story of what's going on in the overall market. Okay, so again, this is the back in 2009. The lows were for the SPY was 67.1. For the S&P 500 was 666.70, which I guess you can write it off to 670. So you can see that it's more or less at 10% um, of the S&P 500. So let's continue. So we climbed this uptrend channel, and we did it again on divergence. Let me change this real quick. Okay, again we did it on divergence, which means negative divergence, which means even though the price went up, the indicators and oscillators they made lower highs. So if the price is making higher highs, the the indicators are making lower highs. So this is the pattern that I'm following, and it's called a diamond pattern because it looks like a diamond. Um, and it started back over here in November of 2009, and now we once we broke down from this um, uptrend channel right here, we started creating the second half of the pattern of the diamond pattern. So let me go ahead and zoom in this area right here, and this resistance area right here, this line right here, it's around 112, 113, and the S&P 500 is going to be 1130, 1131, which is a really strong resistance, which means it's holding the price down. Okay, so we bounced, broke down from the uptrend channel. We broke down, we hit that area once, we came down, made a lower low. When we came back up and did we tested that area again, we couldn't break through it. We we retraced this move right here about almost 70-80%, and now we have done almost in the past month we climb up again to test that area again. Now let me go ahead and zoom in, go into the hour chart, 1 hour chart. This is the past month and the last climb that we have done. On this climb up, you can see the negative divergence on the MACD a little bit better than on the daily chart. This is the 1 hour chart, which means every candle is 1 hour. Um, you can also see divergence on this oscillator right here. Again, we're making higher lows, higher highs on the price and lower highs on the indicators. Um, and lastly, I want to show you the distribution of the volume, which means that it's people are selling, the big money is selling right there. Look at that. So don't be surprised if tomorrow is going to be a pretty nasty day, volatile, a lot of red in the market. Until the next time, thank you for listening. This is directionalanalysis.com.